Hello traders, Nick Shaheen here looking at Facebook, more so of a lesson as to what to do, at what level, when is a good time to get in or get out. It's easier to find where not to do something than it is to find a target, a perfect target. So if I erase everything, chart, this is a daily chart on Facebook, and today is an up day in the market. Facebook is up 2% on a gap up. So do I go ahead and chase it? Not an easy answer just by looking at the daily chart. Emotion says, okay, yeah, I should, fear of missing out. You're going to want to chase it. I do. But then I put my drawings in there, and this is the first leg of something that I had drawn before. This little red, I obviously drew it on a lower time frame. That's why it looks so tiny. So we'll go there. We'll get there. But this is the first comment that I can't really tell much from the daily. So I have to look at different time slices. If I'm making a bigger decision, a longer term, I'll probably go to a weekly and eliminate all the lines to see it clearly. But in this case, I wanted the opposite and go smaller to see what the heck these little lines are. So go to a 4-hour chart maybe. That gives a little clarity as to what we're doing, and then maybe a 120 will probably even make it easier to see. And all right, so I'm going to go even lower to make the decision on even shorter term. So here's what I'm looking at. A descending trend because the markets have been out of bed, fell out of bed because 1,000 things going wrong. So what do I do? What clues can I take from these charts on a lower time frame? And there are plenty. Let's see if I can mark them up. All right, so I'm going to bring in a scratch pad here quickly, hopefully. All right. Oh, before I forget, at the end there'll be a subscribe button that pops up. Do it. It's a YouTube channel and it's free. All right, so here we are. This is the first leg that I drew of a tight range. I said there was a tight range here. I drew it sometime here. And I said the fight is going to be inside the range and you chase either breakout. So they went down. They touched the first leg on the breakout, but then they did this, and today they rejected. So this did not come through. This did. And here we are on the first leg. Gut says that maybe we don't do this right away because of many other reasons. We're going into a long weekend, and there's uncertainty of new tariffs on Monday. Actually, Sunday night, September 1st. So not sure why they want to commit to that. But if they do, great. And as far as something aside from noise and September tariffs and all of that, I can see that this, where it is right now, is the last place it failed. So usually they don't just slice through these levels. They will find some sellers as they are right now. This is a 60-minute chart, so every candle is 1 hour. So it doesn't mean that it's not going to recover and go higher. It just means that I expect, that's why I draw these, I expect some weakness right here. I expect some weakness up here too. Exactly where I put that dot. It's amazing, right? But that would, this is the ledge from where we fell. So this is also going to be weakness. So there's going to be a resistance here and above. So they're going to need a reason. So maybe we come to on Tuesday morning, because short week next week for the US. And this is an even more significant level at 190. So if I'm long, I'm trimming or locking. So if I bought calls, I'll probably sell some calls against them to spread them. 190 is definitely a place where I'd exit or book or lock some more. But these are fast candles, and probably not for a problem for Facebook, so to speak. And if you notice, this is about the 50% level. So if you're a Fibonacci person, that draws attention. And if I take this is about the 50% level. So Fibonacci again here. So if I'm not a Fibonacci guy, but I learned to notice what's going on. So if I draw this extension here, somewhere around here is 50%. So from what I take from today is the fact that I don't need to make decisions without having information. So if one chart on a daily doesn't tell me much, I should consider zooming in. So this is the daily. It's hard to tell. This one tells me more. If that doesn't tell me enough, I can go on the 30-minute. Doesn't add to the story. 15-minute. Doesn't add to the story. It just highlights what a big gap they did today. But now the reins are in the hands of the buyers. So on the shorter time frame. On a longer time frame, the sellers still have the upper hand just because of how the price action is unfolded. However, this information tells me a little bit more than just looking at the chart on a daily. So if I take away anything from today, is that the chart looks okay on a daily as far as information, but I need to change time frames, either go out, meaning to weekly or monthly, to make a decision. I needed to go to a monthly chart this week to make a decision on the gold, the GLD, which I shorted. So, yay. Or zoom in to lower time frames. I start usually with 4 hours, then 2 hours, then 1 hour, then 30 minutes, and then 15 and 5. Depends on how fast you're trading. Are you a 1 minute type of person? Maybe not. Most people are not. So anyway, Nick signing out.